Welcome to PNK Stocks YouTube channel. We'll see how candles are formed. Take an example of ITC. See this chart, 1 day chart. ITC opened at 400 rupees 30, high made 409 and low is around 308 and closed at 408. If you add all these high, low, open, close, open here and low made 399 and high made 409 and closed at 408. Now we need to fill this from open to close and close to open, then we'll get this kind of a candle. So when open is at the bottom and closed at the top, then that is called as a bullish candle and it's denoted as green color candle. Now if you see the ITC on the particular day, the open and close thing, we have 7 rupees 70 paisa rise, that is 1% gain. So now we understand how candles are formed. At the same time, opens at the top and closed at the bottom, then the red candle will form. This is denoted as a bearish. This is bullish candle, this is bearish candle. Only the difference bullish and bearish, open at the bottom, closed at the top is the bullish candle. Open at the top and close at the bottom is called the bearish candle. Today we'll see the single candlestick patterns and what is the significance. Candlestick formation patterns are very much important. If we know this very well, then it's easy for us to where to enter, where to exit is very easy for us. Along with candlestick formation, if you know the support and resistance, it's very easy for us to trade in the stock market, whether it's for intraday or positional trading or investing. Let us start. The green candle, almost no wick or a small wick, is called a bullish Marubozu candle. Similarly, when complete body is in red, there is a small wicks both sides or either side, and complete red is called a bearish Marubozu candle. See this chart example. Red candles, there is a consolidation and we can see the Marubozu candle. After Marubozu candle, there will be a upward direction trend. So the Marubozu candle, an aggressive trader can take trade at the top of the Marubozu candle, or else he can take 1/4 of the candle as an entry. Sometimes you will get a trade, sometimes you may not get a trade, but aggressive traders, they will take at the top of the Marubozu candle as an entry, and you can keep the stop loss as the bottom of the Marubozu candle. Let us see the red Marubozu candle. When red Marubozu candle forms, it again see that it retraced almost half of the Marubozu candle and then prices are fall down. So aggressive trader can take bottom of the red Marubozu candle, or else they can take the trade at the 50% of the Marubozu candle and market will fall down. Spinning top. Spinning top candles are the candles where body is small and there will be a wick on both sides. There will be a green spinning top and there will be a red spinning top, but spinning top's color not that much important. If price breaks above the spinning top candle, there is a chances of prices are going high up, and prices breaks the spinning top bottom, prices will come down. See here, there is a series of spinning tops, and once the top broken on the above side, prices moved up. There is a series of spinning tops either in the green candle or a red candle. Once the price broken on the downside, prices fallen down. Sometimes what happen, prices move up, there will be a spinning top, and our novice investors thinks that prices broken down but didn't fall. it taken a U-turn and prices again broken upside and prices moved out. So when you see in this way, then you need to exit when prices broken out first downside, and then when prices is breaking up, then exit that trade and re-enter the trade on the top side to gain the profits. Dojis. Dojis have a great significance than spinning tops. Dojis almost buyers and sellers are, no one is in a mood to move the market either sides. Dojis are almost zero body candles. There is a small body candles or else there will be a no body candles. They may form any one of these in this way. See the example in this chart. There is a series of doji candles and there is a upward direction. There is a series of doji candles. Once price broken below to the doji candles, prices moves down. Hammer candle. In single candlestick patterns, hammer candles got high significance. Almost we can say 90% of the trades, when we see hammer at the bottom, that is called support, almost all prices will move ahead. Let us see. And one more thing, hammer body, whether it is green or red, it doesn't matter. Hammer is a hammer. This hammer candle, when bears comes into the market and they move the prices almost down, but bulls will come again and they move the prices almost to the top of that. That means bulls are thrown out bears. That means it's a bullish direction. If the candle is green and candle is red, doesn't matter, both are in the bullish trend. See here, market fallen. There is a green candle here, it's shown as a blue, but it's a blue or green one in the same, and market moved up. So in a hammer again, like Moroboju, aggressive traders can take a trade at the top of the hammer, prices will go up, or else you can take the entry 1/4 of the hammer candle, where if prices comes then you will be into the entry, or else you need to search for the other trade. As an aggressive trader, you will be always into the trade if you take on the top of the hammer. Bears are in control. When there is an hammer, prices moved up. You can see that prices are retraced 1/4 of the hammer candle before it taken to the upward direction. If hammer forms in between of the candle, not in the support zone, that hammer doesn't have any significance. There is a consolidation on the support area and there is an hammer candle. Next day prices almost gapped up and moved up. Hanging man. This is again same as a hammer candle, but this forms at the resistance level. When prices are going up, prices will go up, up, up. Big players move the prices up and up to catch the novice investors at the top. When this hanging man happens, big players take the money from novice investors and they make the market come down. So now if you see hammer forming on the top of the chart, there is a chance of downfall. So we need to wait at the bottom of that hammer at the resistance level to take the trade along with the big players. Again, prices are moved up. There is an hanging man candle. Once the bottom of the hanging man made, then prices fallen down. Shooting star. This is again reverse of hammer candle. This is almost similar to the hanging man, but it's a reverse direction. When a hanging man happen at the support, market will fall down. Market gone up, hanging man at the support, prices are fallen down. Market are gone up, hanging man, prices are fallen down. When prices are moving up, in between we find an hanging man, then there is no significance in that and prices further move out. So you need to see that when hanging man formed, there is any candles on the left side or not. If you see the left side of the chart, then you can find if there is any support is there. If there is no support or resistance, then there is no significance of this candle. Just market will ignore that and the prices move up. This candle, almost big players will make this candle to catch the novice investors like us to mint money. Please like and subscribe my YouTube channel. I am giving quality information and bringing lot of strategies in future. So please subscribe and like my YouTube channel. In the next example, we will be seeing the live charts on the single candlestick formation. Thank you. Bye bye.